Hello, good evening, everyone. Welcome to Business Live. Coming up in this bulletin, Bank of Ghana Governor Dr. Johnson Asiama describes current pressure on the cedi as a temporary blip as he announces plans to build more reserves.
It's not surprising at all. We are doing everything we can to stem excessive volatility. The good part of it all is that we have the buffers.
But why is the cedi still under pressure? We shall be finding out soon. Also in this bulletin, IC Insights forecast inflation will continue upward after the Monetary Policy Committee of the Bank of Ghana held the rate at 14%. Plus, next, Joy Business Roundtable comes off tomorrow with a focus on Ghana's extractive industry. We have details of this and more for you. Please stay.
Business Live on Joy News is brought to you by EcoBank, the Pan-African Bank, and Telecel, connecting energies.
Thanks so much for your time. I am Pious, Kojo, Backah. Look now at our stories. Governor of the Bank of Ghana, Dr. Johnson Asiama, has described the current pressure on the cedi as a temporary blip, hence no need for businesses to panic. This is coming at a time when the cedi's depreciation against the dollar has reached more than 8%, with Reuters describing it as the worst performing currency in Africa. But speaking at the last Monetary Policy Committee briefing, the governor noted that he expects the seasonal pressures to normalize soon.
First of all, we have always said it, that the framework we have is a managed float. It's not a fixed exchange rate regime. So the cedi is expected to move, all right, on a daily basis. Expect the cedi to move. It can depreciate, it can appreciate. Our concern is to avoid excessive volatility, right? So we haven't, announced that we are keeping a fixed exchange rate. It's okay for the cedi to be flexible. Now, it is true, we've observed a surge in demand, an increase in demand in recent weeks. But remember the times we are in, the geopolitical, disturbances out there and its impact in terms of oil prices, trade disruptions here and there. What that means is the same volume of crude oil is costing about twice more by way of foreign exchange. So you can imagine why there's greater demand on FX, or therefore some depreciation pressure on the cedi. Then remember the seasonal impacts as well. We are in the month of May, April, May. This is when banks and other companies, publish their accounts. This is when dividend payments are being made, to other countries. When those dividends are being sent out, they don't send cedis. They want to send US dollars. And it's the same demand, it's the same exchange rate that's to, take the impact. So it's not surprising at all. We are doing everything we can to stem excessive volatility. The good part of it all is that we have the buffers. We are building on a daily basis. At times you might see the buffers a little, deep. It doesn't mean anything has gone wrong. Remember, it's on a daily basis. Our trade account is improving, and so long as we have the buffers, so long as we continue to add, it doesn't matter. The cedi, let it float, let it move. What we will ensure is that we won't see a return to the kind of volatility we saw in a number of years past.
Professor Patrick Isuming is an economist. He joins us via Zoom for a thorough conversation on the back of this. Thank you very much, sir, for making time to join us here on Business Live. And you heard the BOG say that, well, there is enough reserve, but the cedi is still under pressure. For all that we know, is its demand, dollar demand driven from importers, corporate repatriation, etc. What really is the situation?
Good evening, Pious. Good evening to viewers, and thanks for having me. Yes, I think largely, what the government is saying is what you expect. In this second quarter, you begin, this is the time where foreign businesses have to report their financials and then pay dividends. And that pressure usually comes. And then we've also seen what's happening in connected to the Strait of Hormuz and what's happening to oil prices. It will be the oil prices that we are seeing will probably be higher than what they would have planned for at the beginning of the year. But so I think in that sense, to the extent that the depreciation is generally under control, it's under control in the sense that this is not like where we see massive swing in a short period of time. That's always what the problem is, where in a 1 month, 2 week period, we see a sharp depreciation, and then sometimes some small correction follows. I think that's where it's problematic. You also have to look at the reserve position. Even though between March and April, if you look at the current economic, the summary of economic and financial data, there's a small dip, but we are still in such a strong position to be able to defend the cedi. Let's not forget that even with this depreciation, the cedi is still trading within the 10.5 and 11.5 band. But within that band, if you move from 10.5 to 11.5, it still looks like substantial depreciation. So I think it's something that is not out of control, and I think the central bank has a reserve to deal with that. And like you said, they're allowing the currency to float within a small band.
But it beats my imagination if indeed, like the governor is saying, that we have adequate reserve. Why isn't that reassuring the market? Is it credibility issue, timing of interventions? What is it?
I don't think it's a credibility issue. I think when you look at the reserve position and you look at the liquidity of the assets, don't forget that towards the end of last year, the BOG sold some of the gold and converted into dollars. So, they really shouldn't have but what you have to understand is that at some point last year, to ensure transparency in the central bank's forex operations, the BOG board approved a new framework. That framework has more predictability and transparency on forex operations. So it means that you can't just small pressure, you start pumping more dollars. So I think the new framework that has come in, it brings more predictability on when the forex operations takes place, and that means that they don't just move every time there's small pressure. I think that is where perhaps they have to follow the framework. They have to follow some guidelines on how they intervene in the market, or as they will call it, how they intermediate in the market. I think that's where it appears that there's some lag, and therefore the additional pressures on the demand side seem to be causing the depreciation.
I see. So from what you said, at what level of reserves or cedi depreciation does this become a stability risk? What would force BOG to change course?
I don't think they are going to change course necessarily. Under the new framework, they have to have a planned and transparent and pre-announced schedule and some amount for how they are going to intermediate. So if they feel that, let's step back and put this in context. 8.4% depreciation year to date. It seems quite high because last year this time we saw this massive appreciation of the currency. Now, if you compare it with our average for the last 3 or 4 years, it's not extraordinary. 8.4% depreciation is not that high. But I think the thing about the currency movement is that because we start at, say, 10.8 or 10.5, even if the currency moves to about 11.2, the depreciation rate will look a little high.
But you are being classified as the worst performing currency in Africa.
I don't want us to put too much premium on that because it is relative classification. And if every other currency has performed relatively well, then obviously yours look a little worse. But it seems like this is one of those situations where we have the reserves, but we've come up with a framework, and this is one of the disadvantages of the framework. In time past, the BOG would have readily intermediated, and then it will come. But now we have agreed to follow some set of guidelines on how we do the forex operations. So it seems like that is where there's some friction. And that's where you are seeing the extent of depreciation that we are currently seeing.
So at what point can the BOG intervene?
I don't think they've stopped their intervention. I don't think they... So what I'm trying to say is that they have to follow a pre-announced schedule and an amount. They can't just get up. And this is where the problem came last year, where they could, especially the first and second quarter of last year, there was so much intervention, they will call it intermediation or whatever, but that brought the city where it was.
Yeah.
So that kind of massive BOG activity in the forest market is what brought us to a stage where they said, okay, now we have to follow some set of guidelines on when we do the operations and how much we do. So you can't just get up and decide to, intervene as and when you please.
All right. Thank you very much, Professor Patrick Isumi. I'm always delighted to have you here on Business Live. Great for 7 years. Now, let's stay a while longer on the economy because leading research firm IC Insights has stated that the Bank of Ghana's latest policy rate holds confirm its long-standing view that inflation is set to commence an upward trend above 6%. More in this report.
IC Insights, however, pointed out that the continued fiscal discipline, relative exchange rate stability, and lower value-added tax rate will cap inflation below 10% by the end of 2026, underscoring the rate hold decision. The Bank of Ghana's Monetary Policy Committee voted to leave the policy rate unchanged at 14% during its May 2026 meeting, being the first rate hold decision in exactly a year. According to IC Insights, the decision aligns with its call for a rate hold at this MPC meeting, which it expressed in its April 2026 inflation rate.
This is still Business Live. We have more for you after this break.
In the first quarter of 2026, Telecel Ghana Foundation continued its commitment to connecting communities through health and education. In health, the focus was simple: bringing care closer to the people who need it most. From cervical cancer screenings in partnership with Kolebu Teaching Hospital to community-wide medical outreach in Yeji and Chamba, and free ultrasound services for expectant mothers in underserved regions, hundreds of women gained access to essential care. With free NHIS registration, that support extended even further. In education, the focus shifted to the future.
We are very grateful for bringing us these kits. That is going to give us an exposure to robotics and other engineering areas.
Thank you, Telecel!
Through the Telecel Digitech Academy, hundreds of students across 5 regions were equipped with practical skills in coding, robotics, and web design, building real solutions to real problems. With a strong emphasis on inclusion, young girls were also introduced to digital skills through the Grow Girls in STEM program. Because when access meets opportunity, communities don't just grow, they thrive.
We hope that many of these young ones will have the interest in STEM activities.
It's more than just a ceremony for us all. It's a moment we'll remember for a very long time.
As the journey continues, so does the commitment to connect, to empower, and to transform lives across communities.
Hello, my name is Pamela from Customer Service. Please revalidate your account by texting your Ghana card number to 0500,000 247.
Hey, Abili, wabedim.
Madam, give me the numbers behind your ATM card. I'm calling from the head office.
An email was delivered across to our customers this morning.
Confirm if this is your bank account. 100,100,100.
Thanks for sending your bank card details.
Send the OTP now to avoid cancellation.
EcoBank will never call, email, send an SMS asking for your PIN, OTP, bank card, or Ghana card details.
Don't get played. EcoBank, the Pan-African Bank.
Hello, please, I'm calling from Customer Experience Center.
From Africa to football's biggest stage, you are invited to be a part of it. Feel the rush, the passion of every moment. Don't just watch the game. Live the FIFA World Cup experience. With VIP seatings, exclusive lounges, gourmet dining, priority access at every turn, luxury all around you. Seamless, effortless, exceptional. Because this is more than a ticket. This is your FIFA World Cup 2026 experience. Brought to you by Match Experience Hospitality. Call 055 155 1119 or visit matchexphospitality.com to secure your packages or walk into any Absa Bank branch, our official banking partner, for more information and payment.
Hello everyone, welcome back to Business Live. The next Joy Business Roundtable comes off tomorrow on the Joy News channel at 10 a.m. And the program will focus on Ghana's extractive industry and the need to reassess the ownership of structure of mineral resources in the country. We have more for you in this report.
The high-level discussion will be held on the theme to nationalize or transform, rethinking Ghana's approach to mining oil and critical minerals. The program will bring together voices from industry, policy, academia, and governance. The panel will be made up of Engineer Dr. Kenneth Ashigbe from the Ghana Chamber of Mines, Wisdom Pupulampu of the Minerals Commission, Dr. Edu Owusu-Sarkodie of the Center for Policy Scrutiny, Dr. Frank Boateng, Acting Director of the Institute of Mineral Resource Investment and Governance at the University of Mines and Technology, and Gideon Ayi Owu, Partner and Resources and Industry Expert at Deloitte Africa. The dialogue aims to move beyond rhetoric. This initiative is part of Joy Business's commitment to shaping Ghana's economic conversation. The program will be moderated by host of the Super Morning Show, Winston Amwa. The dialogue airs live on Joy News TV, Joy FM, and Joy News social media handles.
Nana Brown-Addo is the head of Joy Business, my boss, and he joins me in studio to speak to us about what's happening tomorrow. Nana, thank you very much for joining me here on Business Live. First off, why is this discussion important?
Well, I think that the issue of the extractive industry is been generating some debate for some time now, and actually it didn't start now. You can actually trace this push for nationalization all the way back to the post-independence era for many of the African countries, where they felt that after gaining independence, they needed to have sovereignty over their mineral resources. So we have examples in East Africa, DRC, Zambia, for instance, having 51% stake in their copper. And that's when also, that's around the same time that Ghana also decided that, okay, then we needed to have some stake. So under General Achampon, I mean, Ghana had to acquire, I think, about 55% stake in the Obuasi mine, Ashanti Gold Fields. But then 10 years later, in the 80s and 90s, when many African countries haven't been devastated by debt, then had to liberalize, and then that's when also they were going through their structural adjustment program. So there were a lot of privatization of some of the mining sector in many African countries. Then, but fast forward 2009 onwards, then the push came back again, and we even had the African Union developing the Africa Mining Vision, where they were. I mean, there was a framework that was guiding African countries on how to make the best out of their mining industry, and also in terms of negotiating with foreign investment and all that. But in Ghana, just recently, and you can actually even trace it to what has happened in the Sahel regions when these Mali, Burkina Faso began to also demand a better benefit from their mineral resources. So there's been this push, and coincidentally, the government's agenda is to have greater Ghanaian participation.
That's local content.
Exactly, in the extractive. And so that's where this debate has come up. And fast forward, just recently, there's been a lot of talk. And so that's where we have come from.
All right.
And we further know it's important that we have such a discussion.
All right, so talk to us about the speakers for the main event tomorrow.
Yeah, so we have Engineer Kenneth Ashigbe. There's the CEO of the Ghana Chamber of Mines. We have Wisdom Lampo. He's a mineral economist at the Minerals Commission. We have Dr. Edu Owusu Sarkodie. He is a policy analyst from the Center of Policy Scrutiny. We have Dr. Frank Boateng from the University of Mines and at Takwa. And then we have Gideon Ayi Owu. He's a partner and a resource and industry expert. He will be bringing to the table experience from other countries, because it's important that we learn from what is happening elsewhere so that we can better shape the conversation going forward.
All right, Nana, so after all said and done, what's the expected outcome?
Well, so here at Joy Business, we just don't want to engage in rhetoric. It's not just for talking, and so we discuss, and at the end of it all, that's the end. What really we want to do is to shape the conversation. We know that the conversation is not ending now, especially where there's a lot of action from the government side in terms of regulating our extractive industry. We want to, at the end of the day, develop a policy brief that we can share with the government and also share with the general public, and that becomes a reference point for the general public if they want to assess what the government is doing with the extractive industry. And ultimately, whatever happens with the extractive industry has a bearing on all of us as Ghanaians.
That's more reason why viewers and listeners would have to tune in and listen and watch from wherever you are. It will be live on Joy 99.7 FM, live on Joy News here on this great channel, as well as our social media platforms. So do make a date with us and connect with us as well tomorrow. All right. Thank you very much, Nana Bean. Now, let's touch on some other stories. Government has planned to partner with mining companies to develop local communities for the benefit of its citizens. And this is to ensure that Ghana maximizes gains from the sector, as many question the development growth of mining communities across the country. Speaking to journalists after a breakfast meeting with the Ghana Chamber of Mines, Minister for Lands and Natural Resources, Emmanuel Akufo-Addo, hinted that there is no decision to nationalize mining in Ghana, but rather to partner for development. More in this report.
The statement by the Minister for Lands and Natural Resources, Emmanuel Akufo-Addo, follows a recent call by some civil society organizations for government to localize mining ownership in Ghana. According to him, government has not made any decision to nationalize mining, but rather committed to have a partnership with multinational firms to develop the sector and ensure active participation of local communities. He explains in an interview after addressing a breakfast meeting with members of the Chamber of Mines Ghana in Accra.
The government of Ghana has not fashioned out a blanket policy of nationalizing anything, but we deal with issues on case-by-case basis. Our goal is to make sure that we empower Ghanaians in the industry. We help build Ghanaian capacity. Our goal is to partner with investors who come to Ghana with the understanding that they are going to have a good return on their investment, but they will also leave behind expertise and help add value to our industry and make sure that the resource owners are empowered by the time they leave here.
The Chamber welcomed the commitment from government and assured of adequate support to reform the sector. Chief Executive of the Chamber of Mines, Ken Ashigbe, is positive that engagement with the state will be successful.
We also believe that the local champions that you're creating today, the national Ghanaian champions that you're creating today, are tomorrow's multinationals. And so if we don't ensure that the issues around security of tenure, the fact that we as a country would partner and coexist with other international investors, then when our national champions become ready and the next move they have to do is also go into other territories as multinationals, then that door is going to be closed to us. So it is good to hear the minister give assurance and cement, what government's position is. And
the breakfast meeting forms part of initiatives by the chamber and government to discuss pertinent issues concerning the sector.
Now, government failed to meet its treasury bills target as demand was moderate. According to the auction results by the Bank of Ghana, the short-term instruments were undersubscribed by 5.9%. Details in this report.
Investors bought T-bills worth a little over 4.2 billion Ghana cedis, as against the target of 4.48 billion Ghana cedis. The government, however, accepted about 3.9 billion Ghana cedis of the bid. The 91-day bill was once again the most subscribed bill, as 2.52 billion Ghana cedis of the bids were tendered, representing 59.8% of the total bid. The 182-day bill recorded bids of 877.72 million Ghana cedis. A little above 723 million Ghana cedis of the bid were accepted. For the 364-day bill, 817.12 million Ghana cedis of the bids were tendered. About 699 million Ghana cedis of the bids were accepted. Meanwhile, interest rate declined across the yield curve. The yield on the 91-day bill went down by 1 basis point to 4.91%. That of the 182-day bill remained unchanged at 7.04%. On the other hand, the yield on the 364-day bill dropped by 2 basis points to 10.37%.
Thanks so much for being part of Business Life for today. I am Pious Kojo Backah, but feel free to log on to myjoyonline.com/business for all the business stories you need to know here in Ghana and beyond. Grateful serving you.
Business Live on Joy News was brought to you by EcoBank, the Pan-African Bank, and Telecel, connecting energies.
Did you know that some videos circulating on social media falsely claiming to be from Joy News and advertising some drugs are fakes? These fake videos advertise unapproved medicines using deep fakes of our presenters to endorse these medicines. Here's one example.
Blood pressure exceeds 120/80, internal organs are affected, and a stroke occurs. A famous doctor has developed a drug that prevents high blood pressure.
You can learn to spot these fake videos. Here's how. The first sign. Notice how the lips of the anchor do not exactly match the words being spoken.
I am Anas Sabit on the principal streets of Tichiman, and this is Joy News. Independent, fearless, and credible.
Did you know that some videos circulating on social media falsely claiming to be from Joy News and advertising some drugs are fakes? These fake videos advertise unapproved medicines using deep fakes of our presenters to endorse these medicines. Here's one example.
Blood pressure exceeds 120/80, internal organs are affected, and a stroke occurs. A famous doctor has developed a drug that prevents high blood pressure.
You can learn to spot these fake videos. Here's how. The first sign. Notice how the lips of the anchor do not exactly match the words being spoken. Also, pay attention to the Joy News logo in the bottom left corner. With a real Joy News logo, the globe rotates. If you spot a static logo, it is an indication the video you're watching is fake. Doctored videos often have slight inconsistencies. It could be in the audio quality, visual glitches, or even lighting. Listen to this audio carefully.
Johnson Haynes will talk about a drug from the USA.
You will notice that this is computer generated and lacks the natural pauses and rhythms of a human voice. You will notice something irregular at the edge of the head and the background. It is because the image has most likely been superimposed on that background. Another indication that this video is fake. Finally, always check who is posting the video. In this instance, the post is from a group calling itself Citizens for a Healthy Nation. When you click on the link, it tells you they are into advertising and marketing based in South Africa. This should tell you it is not from Joy News. In another instance, the post is by an individual.
Ghana's third largest hydroelectric facility, the Bui Dam, built to power industry